If you've applied for a mortgage recently, you might have heard your lender use the word reserves and wondered what that might mean. Well, here's a really simple explanation of what reserves are in terms of a mortgage. Reserves are what you have left available for funds after your down payment and closing costs and any funds needed for the actual transaction itself. Now, in some cases, reserves can be required, and in some cases, reserves might just help you in terms of qualification if your qualification is a little bit tight. Reserves don't need to be strictly money that's in your checking or savings account. You can use retirement funds or a life insurance policy that can be liquidated with a cash value. There's many different sources of reserves that you can use. You might wonder why reserves would help with a mortgage. Well, the reason is it gives the lender some extra security. Let's say you get sick and can't go to work, or you lose your job for some reason, or the income source that we're using to qualify you just stops all of a sudden for some reason. The reserves they look at as a security blanket to help you make your mortgage payment in that case. Now, if your lender requires reserves, that doesn't mean that you need to liquidate the funds for the closing. It just means that you need to show that it can be liquidated at any time if you absolutely needed to make your mortgage payment. If you have any questions about this, feel free to give us a call. Thanks.